So, have you been looking for that house? But let me ask you a question. You might be skipping a step before you start that looking, and that is, are you pre qualified for that mortgage loan? Let's find out what you need to do in order to take steps to do that on today's episode of Weezy. So today here with me is Ivy Carpenter. She is a mortgage processor and she is going to give us some very important information and some tips and tricks on going ahead and why we want to pre-qualify for that mortgage before we even start looking. Welcome, Ivy. How are you today?
I'm good. Thanks for having me. How are you?
I'm great. I'm great. I'm so excited that we're finally being able to do this interview. We've been talking about it for a while. So, Ivy, to start off, I introduced you as a mortgage processor. Can you tell us about what your skill set is or what that entails versus we're usually hearing of the mortgage lender?
So, there's a process to the whole thing. You'll meet with your mortgage loan officer, take your application, do your pre-qual, which is what we're talking about today. Once you've found a home, it'll be sent on to processing. They'll collect all of your documents and go through them, look for anything that was missed, anything out of the ordinary, anything we need to question to fit into our guidelines. So I'll ask you for those things. I then send it on to the underwriter. The underwriter reviews it, catches anything that was missed, and then we get it and essentially we're ready to close. So I go through everything and explain what's going on, what's been missed, make sure we have everything we need.
Okay. So before we go into more detail, just quickly, about how long does the process take?
An hour, 24 hours. It depends on how busy the loan officer is and how long the qualification lasts. If you're a self-employed borrower, it can take longer because a lot more has to be taken into consideration to figure your income and things like that. So, sometimes you can walk in if you have an appointment and they can tell you yes or no right there. Sometimes they have to call you back the next day. It depends, but it's not long at all.
Oh, okay. So how does a person find out how much they pre-qualify for?
So you'll take an application. Everyone does it a little bit differently. There are just, you can fill them out online, you can fill them out over the phone, you can come into the office and fill them out depending on who you're working with and what they prefer and what works for you. Um, so they'll take all of your income information, what you make an hour, what your salary is, what you made the previous year. Sometimes they'll collect W-2s, pay stubs, those sorts of things from you, and it's based on your debt to income ratio generally. So how much debt you have in comparison to how much money you make. And then the house is also factored in. So that helps determine how much you qualify for.
Okay. Um, so what are some of the things that they might want to be looking at in the pre-qualification? Is there things like monthly payments and things they want to be cognitive of?
So I would say that monthly payment is definitely a huge factor. Take your rent, and if you're comfortable, you feel like you don't want to spend much more than that, that's the number that you're looking for per month. Maybe you think you'll be a little bit more comfortable with spending some more money a month. Um, you want to give that loan officer those numbers so that they can determine how much you can afford, because the size of your loan is greatly affected by your payment. You may qualify for more than what you're comfortable with, but you don't want to put yourself in a situation where you can't afford to make your payments.
Correct. Good information. Um, so, Ivy, what happens if you don't pre-qualify? Is that just the end? You the end of your
No,
journey, or
no,
squash your
absolutely not.
dreams?
No, no. So you're going to go through the pre-qualification process. You're going to have your credit pulled. They're going to look at it, look at your debt to income, go through everything. And maybe you don't qualify. Maybe your credit needs some work. Maybe your debt is too high to support a mortgage right now. The loan officer generally will help you determine, okay, you need to pay this, and this off, or you need to do this to fix your credit. It should take 6 months, a year, however long it's going to take. Generally, your loan officer will go through those things with you to help you improve your credit and tell you when to come back, and we'll look again and see what we can do. And hopefully we can get you pre-qualified this time and get you into a house.
Well, there's that's great help to be able to, know that, you're not dead in the water and that you're going to be able to get assistance when those things
Yeah,
happen.
absolutely. I mean, our end goal is to get you into a house. Just because you can't right now doesn't mean that we don't want to help you get into one in the future.
Ivy, is financing the same for everybody, or are there different loan products for different individuals?
So there's lots of different products out there. Different states, different counties all have multiple options. The county that I live in has a grant that helps first-time home buyers. If you live in rural areas, there are loans that offer 100% financing. USDA has an income limit depending on your state, county, everything. You can talk to your loan officer about that. FHA is a pretty standard one. That's 3.5% down. It doesn't have as harsh of limits between debt to income, credit, those sorts of things. Your standard conventional, you can put different percentages down. You don't have a fixed percentage that you have to have down on that. There's lots of options. Every area is different. So it's really important to talk to your loan officer about every option that you have and finding the best fit for you and where you're at in your life.
Awesome. That is great information to know. So we know about the loan packages. So when you get ready to do the pre-qualification, what are some of the things that you want to gather that go into answering the questions on the loan qualification?
So some of the standard things that you need are your pay stub, 2 years W-2s, 2 years tax returns, your most recent, I would say 2 months bank statements, just to have them ready on hand. Um, those are really the basic things. They may come back and ask you for additional things, but if you have those things right on hand, ready, saved in your email or printed out, hard copied, either is fine. Um, it'll really help expedite what you're looking for because you already have it right there, and that will answer the majority of their questions.
Awesome. And I heard something in there and I want to pull it out because I want people to hear this. W- You can, are you suggesting that they, if they're even thinking about doing this, to go ahead and save this somewhere handy?
Yeah, absolutely. I mean, I think that having those things saved anywhere in a cloud drive, in a folder in your email, anything is very easy. I mean, we're big on email. We email constantly, everything, all day, every day. So it's just easier for a lot of people. Some people it's not. It's great to pick up the phone if that's best for you. But I mean, I have people that email me documents constantly all day long. So if you can have that stuff right there and you can email it, it will make things go much more quickly for you.
So, so you've given us a wealth of information here, but is there a certain target market that you work with, age ranges and different things like that, that your office works with? What do you see the most of?
I would say we see primarily first time home buyers. We do everything. We do second homes, we do investment properties, we do refinances, but I would say primarily we do first time home buyers, people in their 20s, early 30s who haven't bought a home before and they're just trying to get out of a rental or just move into the next step of their life.
Okay.
So,
And then just on a personal thing, I have one question, because a lot of my demographics are of the older
mhm,
generation. Is there a difference when you go to get a mortgage between, say, a manufactured home and a stick built home?
yes, absolutely. There's a big difference. COVID had a big impact on our market and our rules. So credit limits jumped. A lot of things changed. Standard across the board, it's always been this way. Manufactured housing does take more work, more needs to go into it. It's very doable. We do a lot of them a year. It's very prevalent where I live, in the market that we service. But be prepared for a little bit more work to follow through with it. And that's a very important question to ask your loan officer when you're pre-qualing. Do you want, are you interested in buying a manufactured home? Because it does make a difference in what you qualify for and whether you qualify or not for that.
So, Ivy, you have given us great information. If people want more information, whom should they contact to get answers to those questions?
You're going to want to contact your loan officer. If you haven't gotten pre-qualified yet, it depends on your situation. If you're working with a real estate agent or you know what real estate agent you want to work with, contact them. They'll give you a referral to a loan officer. Talk to your friends, see who they've used when they've bought homes, or call your bank. Who you bank with, they want to help you. They already do business with you. There's lots of options out there. You'll find your best fit. So
That's great. Well, Ivy, thank you so much for this wealth of information today. And thank you all for tuning in and watching this interview. So until next time, everybody, bye.
bye.